Hey Bitcoiners, Lockie here from Edge21. Today we're unpacking the real reasons behind Bitcoin's recent price shakeup. From institutional slowdowns to what hodlers are really doing behind the scenes, we've got the on-chain data, the ETF volumes, and some game-changing trends. Is Bitcoin building momentum or just catching its breath? Let's break it down. Bitcoin is currently trading in the $81,000 to $88,000 range after a rollercoaster week that included ETF outflows, global tariff tensions, and one massive macro slowdown. But beneath the price candles is a bigger story. This isn't a crash, it's a cool down in capital. Bitcoin's realized cap, a key metric that tracks actual money stored in Bitcoin, has stalled out, meaning new capital isn't flowing in at the same pace. According to on-chain expert James Check, this signals a low liquidity environment, not a full-on bear market. Let's talk liquidity, the secret sauce that drives price explosions. Capital inflow has softened significantly. Unlike 2024's bull bursts where the market soaked in billions, current inflow has flattened. Profits taken daily have dropped to about $750 million per day compared to a euphoric $3.5 billion per day peak. That's a huge cooldown. Investors are taking fewer profits, and those who bought high are holding tight or realizing minimal losses. Even better, the sell side risk ratio shows most investors aren't in a rush to offload Bitcoin. They're actually waiting for the next big leg up. Remember the ETF hype? Spot ETF volumes are down from over $6 billion per day to just $2 billion per day. It's not a panic, it's just a pause. Demand from institutions like BlackRock and others have cooled off. For now, the story's the same in retail. Spot trading volume has plummeted from $15 billion to $5 billion per day. Less action means thinner order books, which could lead to sharper price moves up or down. And here's where things get interesting. Long-term holders, those who've weathered every cycle, aren't selling. In fact, their activity has bottomed out, meaning they're unlikely done taking profits and are back in accumulation mode. Meaning they're likely done taking profits and are back in accumulation mode. Roughly $270 billion in Bitcoin is aged between 3 to 6 months, about to turn into long-term holdings. That's a massive chunk of supply becoming illiquid, bullish. This wave chart from Check on Chain confirms the trend. More supply is aging into strong hands. This has historically marked the early phase of bull runs. Now, let's answer the big question. Where is Bitcoin headed next? According to James Check and supported by key data, the recent 30% drop from all-time highs is more of a time correction than a bear market. There's no mass panic, no major outflows. This is Bitcoin consolidating above $1 trillion market cap, something it couldn't sustain back in 2021. Short term, expect sideways action between $78,000 and $88,000 with a potential spike to $90,000 if volumes pick up. Downside is capped by strong support from ETFs and HODLers. So what's the bottom line here? Bitcoin isn't broken, it's breathing. This isn't the end of a cycle, it's the build-up before the next move. From a thinning supply to calm, confident hodlers, the signals under the surface are bullish if you know where to look. Where do you think Bitcoin is headed next? Let us know in the comments below. Stick with Edge21 where we cut through the noise and deliver Bitcoin insights that matter. Follow, like, and share if you're stacking sats and stacking knowledge. I'm Lockie McWilliam, signing off. Thanks for watching, stay strong and hodl on.